Good morning, everyone. My name is Anne-Marie Band. Today is Wednesday, May the 10th, and this is the Moneyball Morning Report for the Benzinga Pro platform. What we are doing is pulling back just a little bit, but folks, we are sitting in a very congested monthly flow event that's got a top edge that's really around 41.54 and the bottom edge around 40.87. We're seeing a lot of traders do that kind of movement back and forth. They're buying these dips, they're selling the rallies, and this morning into the CPI number, there's just not a lot of people participating. Everyone is still waiting. So my suspicion is no matter what the trade is at the first part of the noise, it's going to revert back into the congested zone, because again, everything that's getting reported has then got to be digested by the markets to say, okay, well, that means this is going to happen and how do we position then? And that means that is going to happen and how do we position then? And so I still suspect that no matter what the news is, if you follow the spike, it's going to collapse. And if you follow the fade, it's going to find a floor. So I would say look for those edges to either complete your longs or complete your shorts, and then watch the gravitation back into the congestion zone, because legitimately, I don't really see that the market has news to get it out of this range at this juncture. All right, so that's what we're looking at. The number ought to be out in about 15 minutes. I have a doctor's appointment, so I am leaving right after I do this video and will not be online when the market goes live, which is kind of crummy. But I will be back by about 11 and we'll be off to the races once more. Okay, let's take a peek at what we've got here. I'm gonna delete that one and take a peek at this sideways action. Notice, sitting at the floor, we've got this space. If we get above 13,288, we could see a range expansion. Depends how people are moving. I don't know what's going to be the movement here, other than if it breaks below 13,250, you're probably going to be able to chase down some motion. If it breaks above 13,280, we're going to have a continuation to the upside. And the slashy bits, really, around 13,260, you're going to see traders tried to push the edge up. So you really could sort of run away with the trade once it gets a little bit above the close of the prior day. But we have been chopping around quite a bit into this number. Again, whatever the move is, whether it lasts a day or 2 days or whatever, I suspect that it reverts simply because the action is just trapped in this particular range. So that's certainly what I'll be looking at in general. All right, and we see the levels that are sitting right there. Let's take a look at the YM. It really looks fairly different to all the others. Here we are almost completely retracing the prior month, right? And that line sitting down at 13,000, about 400 or so, we're coming back into. It looks like to me, we faded it for a day and then moved right back up into the range. This is just what flow feels like it's doing. We've got a couple of days down here, a couple of days up here, and then a collapse right back into the middle. I think really it's because people are waiting for something to break or not break and then stabilize. Really don't know. But here's what I'm looking at. We are below the close of yesterday. and we are holding the low of yesterday. So whatever this wick action is that comes in off of the edge, I would be most inclined to trade the range. That means step back, allow it to come into this edge near 13,386, and then consider the bounce after it recovers it, or allow it to come into the resistance zone near 13,850, and then try to fade it from there. That's my suspicion right there. But I do believe that if it holds these breaks, we're going to have another group that will sort of move through the thin pockets that we are sitting at in these zones. All right, let's take a look at Coil. My friend Chai Girl, Tracy Schuchart, said that she got word that it was an Asian fund that liquidated that had this area in here, and now we are holding up above the level. We faded very sharply. Actually, we faded like this just after my show on the Place Your Trades Network yesterday, where we picked up that event contract to close at 72, and it closed well above that level. So it was a great way to double that that investment. And so now we are looking at the chart struggling at getting over this 73.95 area, 74. This is still negative flow, so bounces are going to run in to trapped buyers that will want to liquidate, I suspect, particularly if they were caught in this sort of thing and they're, they need to get the heave-ho out of the trade. So we are looking at the move into perhaps 74 to 75.70, and then watching for the fade. If the CPI number comes in not very hot but cold, I suspect we come in and retest this area, which should make it another buy zone at the 71.30 zone. All right, so let's take a look at gold. Gold on the run again. Every single fade's been bought, but look at the stinking gaps, folks, and the volatility is pretty extreme. Where are we sitting? Down here very quietly. I did put a cheat sheet for us in the Benzinga Pro platform to see how gold responds to different types of motions. The dollar continues to climb here this morning, but I don't quite know, sorry, tickling the old notes, I don't quite know how they're going to resolve up and over that level near 101.90. I think the dollar's going to have some trouble there. So the short story is pullbacks are still buy zones in this particular regime. What I would love to be able to see is a pullback into the 1977 or 1950 zone. Not sure I'm going to get it, but so far this is starting to look a little bit rangy, so I'm going to be looking for 1977. All right, now we're going to move to SPY.